The reason that the APR is so high for payday loans is because APR represents the annual percentage rate, which is the typical measurement for financial products across the world, whether it's credit cards, mortgages, personal loans, or indeed payday loans. However, a payday loan only typically lasts a couple of weeks, maybe 4 weeks, 6 weeks, 8 weeks, maybe 3 months, whether the APR is something annual. So straight away, you're taking a product which is only a couple of weeks and compounding that interest to make it annualized. So even something that has a somewhat low or medium interest rate already seems very, very high. However, the cost of payday loans is typically high anyway. This is because the loan is unsecured. So if the borrower cannot repay their loan on time, the lender doesn't have anything that they can kind of take to kind of repossess or recover their loan amount, such as a car or a property or maybe an item of value. So therefore, they have to charge slightly higher rates. In addition, payday loans are typically used by people with bad or poor credit ratings or somewhere kind of in the middle, maybe less than perfect credit scores. So therefore, they have to accept that a couple of people aren't going to repay. And generally in the payday loan industry, that might be that 20–25% of customers don't repay. So if they don't repay their loans, well, unfortunately, the other people then have to pick up the slack. And that's why the rate is just a bit higher. So when you take all these things together, such as a compounded interest rate, the fact that it's unsecured, the fact that it is for people with bad credit, plus there are lots of costs involved with kind of operating, like having a regulatory license, maybe running credit checks and even faster payments. Together, this makes the cost of pay loans quite high, and ultimately the APR is going to be high too.